Let's welcome in Mayuresh Joshi. Mayuresh, what's your call on Reliance Industries first? 1202 right now.
Afternoon, Pankaj. Again, I have been long-term optimistic on Reliance Industries for a length of time and continue doing so. So if you look at all the different pieces of Reliance, I think they're all coming together now, at least as far as the core business is concerned. The pet coke gasification should start getting commissioned by the second or third quarter of this fiscal. The off-gas cracker that we are talking about, with expectations that it will come through and expectations of polymer and polyester margins expected to remain firm. Petchem margins at the EBIT level should get maintained. E&P probably will take some time, but again, it's a very minuscule portion at this point of time. And again, I think you're looking at the telecom piece again with the kind of announcements that have been done yesterday, the kind of subscribers that they've added on. Clearly, I think they're taking the competition head on. So in terms of pricing, the pricing pressures will continue for the existing incumbents to probably match the plans. And as data pricing wars escalate going forward on who can give the maximum amount of data at the lowest available price, my own sense is that the kind of capex that Reliance has done, 1,70,000 odd crores, another 30,000 odd crores in terms of incremental capex, and again I think the core capex actually coming to an end. So in that sense itself, I think the telecom numbers might not get reflected, which will still probably mean that the ROEs on a consolidated level might remain subdued. But the earnings profile generally for Reliance Industries for the core business should improve drastically going forward. Even on the refining front, with the middle distillate facilities that it has got, it will be able to hold on to its GRMs. And telecom, again, I think largely the street had factored in that it will take at least 4 to 8 quarters for telecom to do meaningfully. But again, with the kind of numbers that we've got and the optimism shown in terms of data plans, it is definitely going to create a lot of pressure for the existing incumbents. So I think it's an obvious reaction that you're seeing on the stock. And again, I remain long-term positive on the story, even from these levels.
As far as Reliance is concerned, what is the market pricing in which was different than yesterday?
No, not too sure what the market was pricing it, Pankaj, but largely again expectations were that the pricing action will begin from the 1st of April. Now with the Jio Prime membership that he's announced and the kind of pricing he's announced with the kind of data offerings of around 30 GB per month, 1 GB per day, I think it is substantially higher in terms of data offering compared to the existing incumbents and the existing plans. Secondly, I think the pricing is way too lower than the normal bills that we receive on the primary numbers if you're outside the Jio network. So it's an obvious reaction that he's expecting to retain most part of the 10 crore subscribers that have come to the system, with very minimal churn happening onto the churn ratio as far as the net subscriber additions go. So to that extent, I think as far as the data volumes are concerned, with the kind of pricing that Reliance has come out with, my own sense is that you might actually see migration happening. This is at least what the street believes. And with the existing pie, I think if there is even a minimal shift happening to the Reliance platform, who have still not shifted, it incrementally adds on to the kind of numbers that Reliance is probably talking about exponentially going forward. So again, I think this is the way the street is probably looking at it. Again, as I said, I think with interest and depreciation being capitalized, there is no way that on the bottom line, the standalone telecom business will make money. But largely on the EBITDA front, as we've seen for the existing incumbents as well, I think it should be very positive with the number that we are probably seeing in terms of subscribers that Reliance has added.
Right. In terms of Idea or Bharti, how do you think this plan would impact them, or you don't think that it will impact them in a very big way?
Now again, I think I was having a look in terms of their core data points. The data realizations have come down drastically for all telecom incumbents. So largely again, Bharti close to around 17.5, 18 paise per megabyte for the quarter gone by. Idea was close to 16 paise per megabyte for the quarter gone by, which is significantly lower if you check the last 4 and 8 quarters. So pricing has definitely come down. Have data volumes increased? Data traffic has definitely increased for both these incumbents. But largely again, because of the voice ARPUs coming down significantly as well, and no relevance probably being laid out for the voice ARPU part of the business, with free calls being minted by all telecom operators, it is going to be a story in terms of how data as a percentage of their overall top line can grow, and how much data traffic can these incumbents probably garner for themselves. Having said that, probably I think you've seen data traffic actually having stabilized or actually gone down a tad bit for Bharti and Idea, and that were very, very clear in the numbers gone by. Obviously, I think the free pricing by Reliance Jio was one of the concerns that the incumbents had, and add to that I think the demonetization pressures which were being played on the balance sheet. Third, I think even in terms of the core capex that they've done, both in terms of the network upgradation costs as well as the interest payments needed to pay out for the spectrum auctions, that has affected their operating cash flow significantly. And though I think the news in terms of consolidation specifically for Idea might act as a solace for the stock, I think numbers over the next few quarters will still be under pressure. So I think it's going to be very, very interesting over the next few quarters in terms of how data traffic moves, specifically with Jio's new pricing, and whether that has a significant amount of shift in terms of churn, which has been very, very stable at around 3% for Bharti and Idea, whether that churn actually increases along with number portability if some existing users actually change. So I think it's going to be some exciting times for the new incumbent, but I think equally tough times in a predatory pricing environment and a tough environment where pricing is going to remain under pressure at least for the next few quarters on the data front.
Reliance was not performing, Mayuresh. Some of the other infra stocks were not performing. Reliance has played a catch-up. Telecom has played a catch-up. Do you think that infra stocks will also play a catch-up?
So largely, again, Pankaj, with the kind of outlay that the Exchequer has laid out in the budget, infrastructure investments will be fast-tracked by the government, at least on the government capex side. Now again, one must really note that the private capex will still take some time to recover and probably follow the government capex. So largely, I think the analyst expectation was the first half of FY18 is when the private capex should start picking up. But again, I think because of demonetization and remonetization, I think this has got shifted to the second half of FY18. Now with infrastructure spending expected to come through on roads, ports, decongestion of a lot of other projects including mining, my entire sense is as it picks up steam specifically after monsoon, private capex, if all other things remain constant in terms of global volatility and even on the Indian context in terms of stability on the macroeconomic factors, the private capex should pick up meaningfully as well. So again, yes, infrastructure as a space, specifically roads, highways, EPC players, selective port EPC players, power EPC players, I think this should see significant investments, and with the kind of order flows that are expected to come through for the players within these industries, my own sense is that equity IRR should improve over the next 2 years.
Right. How would you look at some of the smaller banks? So we've seen Karnataka Bank going up, DCB went up earlier. Do you think that markets is pricing in there'll be some M&A into these names?
So I think that's always been the buzz, Pankaj, that a lot of consolidation might happen within the private banking space. But if you look at individually these spaces, a lot of exposure for these players were towards either gold or SME financing or MSME financing. The second part which plagued their balance sheets was also the kind of wholesale funding and the wholesale deposits that they had on their balance sheet, which did not give them the leeway of probably having a lower cost of borrowing and then passing it on to have a greater credit efficiency in terms of the credit income ratios. Again, the cost income ratio is extremely high for these banks and they're slowly and steadily coming down because of the kind of exposure that they had both in terms of the SME, MSME book, which was largely under stress, specifically to do with metals, iron, steel, gems and jewelry, real estate. So to that extent, again, I think as recovery is being seen in the end user industry, specifically metals, iron, steel, my own sense is that you will see significant improvement happening on the credit dynamics of their balance sheet. But again, I think I'll be extremely stock specific. So I have been liking Federal Bank, which probably has ticked all the check boxes, at least in my opinion. Wholesale costs come down, SME borrowing has gone up a tad bit, and again with the leeway that RBI has given, that should improve its quality of its asset going forward. Retail advances have grown at a decent pace. The bank expects NIMs to be maintained between that 3.2 to 3.3% kind of a range. So I'll go very, very specific here, but again within the mid-cap private sector banking, Federal Bank is something that I've liked for a length of time. I remain positive on that counter, and similarly I think Lakshmi Vilas Bank on declines with an improving profile both on the liability franchise front. My entire sense is that the return ratios over the next 2 years should show improvement even for this bank.
Mayuresh, just on idea, based on the deal, can you just give your view?
No, again, I think the street largely has given a big thumbs up in anticipation of this deal, Pankaj. And largely, I think one really needs to understand the construct of this deal going forward. How is this entire thing going to move? How much is Vodafone going to contribute? Whether it's going to be a joint venture entity? How much is Idea going to contribute? What can be the contribution of Idea in terms of equity infusion? Now, I think there are various ways of putting this across. The number of subscribers, if Vodafone and Idea merge at this point of time, can be close to 380 million. So that's almost 4 times what Reliance Jio has at the current juncture. Market share,
Right.
there are around 6 circles where the revenue.
Right. In terms of any other name as far as the large cap space is concerned, there is still a lot of M&A activity that one can pick up. So there were talks about IndusInd and Bharat Finance also merging in. Do you think that even that could create a lot of value where such big banks, such big institutions come together? They largely would create value.
So again, don't want to speculate, but again, I think if institutions do come across, I think the cost-benefit synergies need to be monitored very, very closely. Yes, I think it does create a huge amount of impact in terms of niche areas that you're probably not present in, having a big partner come through on that front. And with optimization happening both on the OPEX part as well as the CAPEX part because of any consolidation which probably takes place within the industry itself, it is going to prove cost effective going forward. So largely again, I think these deals can be value accretive if done and constructed in the right manner. But again, I think even within the large cap space, I think there would be spaces going forward on declines where I still feel that value can be made. Metals, for example, is one space which has run up significantly in 2016. But largely, again, I think if you look at the dynamics going forward and if one really has the belief that LME prices hold up going forward as the trend is suggesting at this point of time with improved infrastructure activity both in the United States as well as China stocking on the inventory front and actually doing long products much more efficiently. I think the prices on the ferrous and the non-ferrous front have already seen a spike and should stabilize. The domestic front has been equally good for MIP pricing, anti-dumping duties bought in, which has probably created some impetus in terms of the earnings profile for the company. So I think Hindalco is something that I'm probably looking at in the large cap space on declines, obviously, because it has moved up significantly. But I think the exposure for the Indian markets, smelters running at full capacity, bauxite exposure, captive coal exposure, will optimize cost. And even Novelis, as it starts integrating its auto lines, 25% of the contribution as the management expects from the auto lines should ensure margins hold up. They've actually repaid or restructured their debt to a large extent, which will also entail interest cost savings anywhere between $80 to $85 million on an annualized basis. So again, Hindalco on declines is something that we'll be looking at from the large cap space.
Right. Pradeep Orchandani is also now joining us. Pradeep, what will be your view on Nifty? You think despite the move of Reliance, Nifty is where it is showing that there is huge selling pressure as well in the market?
Hi, good afternoon, Pankaj. To put things into perspective, from the top of 8970 made in September 2016, Nifty took 4 months to correct to 7900, and in less than 2 months, it has recouped all the losses. So 8970 being that earlier top on monthly charts is also a big resistance, and after a steep run up of nearly 12-13% in less than 2 months, Nifty is approaching that resistance, and that was our major target through this rally. So it's logical that Nifty consolidates around these levels. Having said that, if 8970 is taken out decisively, then obviously 9119, which was the highest high made in March 2015, would be the next target. For the timing, 8830 is the immediate support, with the stop loss of which existing longs can be held onto. But we have also asked our clients to book some profit in a long position as 8970 was approaching.
Right. Mayuresh, what will be your view on the market?
So largely again, I think you have seen a big spike up happening over the past few weeks. And all the events have probably gone by. I think the next event that the market is looking at is the outcome of the UP state election. Now, if it turns out to be the way the market anticipates, I think this rally will very well continue with expectations that leaving aside Q4 earnings in terms of aberration that we'll probably witness in terms of demonetization and still some amount of chinks left in terms of volume growth and price degrowth in terms of consumer-facing industries, whether that be autos, consumer staples, FMCG, consumer discretionary. A large part of the market, if the saying goes good, believes that the earnings recovery should happen from the first half, can create some amount of impetus in terms of earnings estimates actually improving for the market as a whole. So I think we might probably stay in a range, at least till the UP elections, but if they go as per the plan, as the markets expect, you might see the rally continuing going forward with expectations of earnings recovery happening in first half of FY18.